Welcome to episode number 1 of a Transform podcast. For those of you that do not know, we're bringing you professionals in the field to teach you how to transform your life, your health, your wealth, and your relationships. I'd like to introduce you to my friend, Jorge Aroche from Global Invest. Jorge, please tell us a little bit about yourself and your company.
Sure. Thank you very much for having me, Alex. I'm a seasoned investment professional. I've been helping people, or managing wealth in the financial services market for over 35 years. I started in the 80s in the commodities markets and took my focus to the securities markets in the 90s. I worked for an important regional player. By region, I mean a Latin American player, Backcorp Securities, in the 90s. And there I helped, I managed the operations and helped clients with sophisticated strategies, mainly hedging interest rates.
Okay. So where did this passion come from, Jorge? Why did you start in the industry?
Well, I always had a curiosity about the financial markets. Right? And I also enjoyed news and information in that way. And when I got a little bit more curious about the financial markets, I saw that those two things sort of married each other. The news always has a role in the financial markets. And the more I learned about the financial markets, the more I liked and was curious and enjoyed them till this very day. It's never stopped.
Curiosity brought you to what you're doing today.
Yes.
And how long have you done it again? You mentioned it, but
For 35 years, or over 35 years. In May of '86, I started as a registered representative in the commodities business. So I've been shepherding clients through some of the most, and have seen some of the most significant economic events of our time, and managed clients through those events.
Wow, man, that's amazing! Congratulations. That's a long time.
It is. I can't believe I can say that actually, but because everything for me is like just yesterday.
Yeah.
When I look here or look into the camera here, I can say it's not just yesterday. It's been a minute.
I hope this doesn't make you feel bad, but I wasn't walking this earth when you were working in the industry.
It doesn't make me feel bad.
All right, my friend. So, because you've been in the industry so long, could you share with me some of the common misconceptions you hear about investing and how something maybe you like to debunk?
The biggest thing I'd like to debunk is that, investing is not a get-rich-quick scheme. It's not something where you're going to be rich overnight. It doesn't work that way. Now we have the Florida lottery for it.
Yes.
It's about somewhere else in the country, where your respective regional lottery plays. If you invest like that, you'll probably do like the lottery. You're probably going to lose your money, And that's the biggest thing I'd like to debunk. Investing takes thought, it takes planning, and most importantly, it takes patience.
Absolutely. I'd like to piggyback on that. One of the things that happens in my family is that a lot of my folks do not invest. And the reason they say that they do not invest is because that's like for rich people. The average person cannot invest. What would you say about that?
I would say it's definitely wrong because the best time to invest is today. Because it's not about timing the market. It's about time in the market.
Beautiful.
The more time you'll have in the market, the better you're going to be. Some good advice for people that are starting, right? I think that's more or less what we're talking about.
Yeah.
You have to have a budget, and you should always pay yourself at least a part of that budget, right? You should always save some money. In other words, that's a long way of saying you should save some money. And one of the best ways to save that money is in the financial services business. And you can do it by opening up an IRA account and putting in it $100 a month, and buying an S&P 500 fund, and you'll be surprised. With the passage of time, in 20 years now. I know when I was younger, 20 years seemed like an eternity, and anybody that talked to me in those terms, I thought they were crazy.
Yeah.
Now, having
35, just working on the industry.
Exactly, I blinked and the last 20 went by, and so I'm here to testify that the time to invest is now. You should get started now, even if you have to go small, and you will be surprised how quickly time passes by, unfortunately.
Yeah. And I'm no investment professional, but I could say that best time was yesterday.
Exactly, because we've been for another gigantic event. This is a fascinating business. Just in the last decade, the things we've been through, the COVID pandemic, this rising interest rates is something we haven't seen in 40 years. I mean, it's a never-ending, breathless movie that I get to watch each and every day. It's incredible.
Yeah.
And help people through it and watch them, and hopefully help them grow.
Absolutely. You mentioned some of the tips that the listeners could definitely take advantage as far as, investing for their future. Do you have any other additional tips to share? You mentioned to start contributing to an IRA, to start as early as you can. Any other tips that you'd like to share?
Start with a budget, and again, pay yourself. And I think I touched upon that. And then the vehicle you use, be it a regular investment account, they do it yourself broker, so you don't need a help from a guy like myself, is an easy way to do it. Then the vehicle you choose, whether it be a regular investing account or a retirement account, so you can't quite get at that money and start thinking about that. And as far-fetched as that might seem, is a great way to do it. Now, there's investments you should think about. We're going to live somewhere. Probably going to have to live in a house. We're not going to live under a bridge. Having your first home or apartment is a great investment vehicle that you need anyway. It's a great wealth creator that you're going to have to use. Rather than paying somebody else's mortgage, you might as well be paying your own if you can. So, there's things that we do in order, and that's probably a good one,
Absolutely. Maybe this is going a little bit off topic, but I think you mentioned something that a lot of the folks that I know do not know the difference. A lot of people in my own family. What's the difference between a regular brokerage account and a retirement brokerage account?
Sure. So a regular brokerage account is just like your bank account in the sense that you can, pull money in or take money out without any real consequences of reporting. A retirement account is money that you put, as it implies, for retirement, hopefully, right? And that has certain consequences, both both positive and negative. The idea is to use it positively, obviously, and the positive consequence is that whatever we put in there, we can take off our taxes, right? So let's say you make $50,000 a year and you put $5,000 into that thing, you will report $45,000 worth of tax. So you will not be charged that 20, 30%, whatever tax bracket you're in, and that will come straight off your taxes. So imagine your money, your $5,000 is growing before taxes. It's not like you had to pay taxes on that money, and it really looks like $6,500 or $7,000 they had to pull out to put in there. Like if you do it in your regular taxable account, right? That's money after taxes. Like if you put money in your bank, that's probably after Uncle Sam has had their slice, or you're going to owe it in April 15th anyway. So this is pre-tax money. And therefore, just there alone, if you leave it in cash or if you buy a treasury bills, how much more is that generating? You're generating money on the money that you haven't paid Uncle Sam. There's another side to it. When you start pulling it out, you owe the taxes on that month.
Okay. So the way that I understood it is that when you put the money into this so-called retirement accounts, you contribute that money before you have paid out your taxes.
Correct.
And once you start drawing or taking money out from that account, then at that point in time, whatever is in the future, you're gonna pay taxes on the amount of money that you're also taking out.
Correct. So it's the same thing. It's the same thing in inverse. Let's say now you're making the same $50,000, but now you take $5,000 out of that account. Well, now you owe tax upon $55,000. Right. The opposite of the example I gave you before. The planning idea in that is that when you retire, you're retiring. You're probably not going to be making that $50,000, or now you're not going to have that income, and you're substituting that income. So you're at a lower tax bracket, and plus you had the benefit if you've expired to start early, and that compounding of that money, incredible exercise. Yeah.
Beautiful, man. Thank you for explaining that. I think there's an incredible amount of value in people understanding that. So I certainly appreciate it. So could you share with me any inspiring stories related to investments that you've had, that have had a lasting impact on you, whether that's a customer testimonial or something in your own life? of the power of investments. I don't know if that makes sense to you.
Oh, it definitely makes sense to me. I've had the pleasure of watching people's money grow, and what that's meant. And, one great story is, it's a gentleman that, gave us a certain amount of money. And I can give you exact numbers. I don't, gentleman gave us about $700,000, which is a lot of money,
Okay.
and he has already withdrawn $700,000.
Wow, man,
And his account is worth about $400,000.
Wow.
So they're very appreciative. His sons and his dad is these is an older couple. They're very appreciative that that had they not done anything, they would have already gone through that money, And now they take all that money out and they still have like $400,000 left, and that's a lot. And like that, I've been fortunate, and the markets have been good. And people that maybe that don't need that wealth right there to use it, like that gentleman did, but people that have doubled their money, in a period of time, and it's a substantial amount of money. So it's they're very appreciative, and I'm appreciative that they gave me the opportunity to help.
Yeah. Well, congratulations to you and your clients, man. That sounds phenomenal. On that topic, right? Your clients have you, but the listeners here might need help with resources, books, influential figures they could follow. So talk to me about some influential figures or books or this type of resources that have influenced your expertise in advisory services.
Again, the curiosity of it is looking at these leaders in business. And they never cease to amaze me. I'm not starstruck by people in Hollywood or in athletics. I'm not the guy that would go and get probably an autograph or something like that. I look for some of these guys. I am just in awe of people.
Yeah, some of them have like personalities.
To me, they are. I don't know if that's a little weird, but to me, those are my superstars. Because I'm in awe that somebody can, when you think of Steve Jobs and his partner in a garage starting a company that is worth $3 trillion to
mind-boggling,
like the GDP of countries, smaller countries in Central America, which I've covered. It's like, it's easy to say, but it's mind-boggling to get your head around, and industry leaders in banking like Jamie Dimon, and of course everybody knows Warren Buffett,
Oh yeah.
Who doesn't know of him? So there's many, and maybe not of that kind of notoriety, but there's many that I follow that I am, I would probably go up and get their autograph. Like, what's this? It's weird.
I'm a huge fan. I'll show you something. Is it here? Is it not here? I'm a huge fan of this guy.
Yes, David Ramsey, of course.
Dave Ramsey as well.
Yes, and he's got common sense advice that goes a long way.
Don't live beyond your means. Simple advice, man. It's something like your grandmother would tell you.
And a lot of it is just very common sense. We live in a society where we're a capitalist society, so we're a consumer-driven society. So everything is geared towards making you spend money. I mean, that's the way our economy works. It's 70% consumer-driven. Put that shiny object in front of you to spend your money on, and it sure will look a lot better than putting it in that retirement account that I was telling you about. Until you start getting up in age and say, "Damn, I had only listened to that podcast from Alex. Maybe I'd be in a better position right now." So, my advice is don't. Of course, we have to enjoy life. That's part of it. You're not going to spend every penny the exact way it should be spent. That's, I would say, foolish, because part of life is to be enjoyed, but you have to again
to have a degree of balance. Have a degree of balance. You mentioned something that brought me to the following question, which is, it's not the same to work with everybody because they have different goals. How do you continue to stay motivated, innovate in the investment world despite challenges, dealing with different folks and periods of stagnation? Right now, we're going through something difficult in the economy. How do you stay driven and innovate?
Sure. Again, the thing that makes me driven and innovate, if you would, is the financial markets themselves, and the endless curiosity. The effect that I have on the people and how I can handle those relationships is really the hardest part of the job, is the behavioral science, we call it in this field. of the job. In other words, it's not managing the money; it's managing the customers and their expectations. And we try to ascertain how a customer should be allocated, what level of risk is good, for that customer. And we have a series of questionnaires and people answer, but sometimes they do not behave the way they said they were going to behave, right? Usually the psychology is like this. You watch the market go up, 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 and then you invest, and then the market comes down. Yeah. And then the people that panic and get out, even though every one of those, that we will put in an investment that's subject to a lot of volatility, we would ask certain questions, and they all answered, yeah, no problem.
High risk, long-term horizon.
I have a long-term investment. Right? I don't need that money for 10 years. Some of those inevitably will panic and get out at the very bottom. And I can spot them, okay, this guy's getting out. This must be the bottom of the market. It's almost a better signal than the numbers we get. And then I can think of one gentleman that this happened to. It's horrific because he can afford the money. The market has bounced back incredibly from this, panic that we got with the repricing of money, which is the latest crisis we've been through. And I think about him, a lot because it just, it makes me sick. But as the great philosopher Michael Tyson, everybody has a plan until they get punched in the face.
Oh yeah, that's a powerful quote.
That great philosopher, Mike Tyson, everybody has a plan, until they until they get punched in the face, and then it's like, whoa, wait a minute,
What do I do? Do I duck? Do I run?
Like, how about we do what we said we were going to do?
Right. Yeah, man.
But the people that are able to execute on the plan will come out on the other side making money. Every one of those clients that had success is because they've had patience and they've had drawdowns. Because in this last decade, we have seen some doozies. And the latest ones are only that, the Federal Reserve raised interest rates 5% in 1 year. That I can't think of one time when that's happened. That's crazy. Money repriced, the markets went nuts. The COVID-19 pandemic, the markets corrected 35%. What an opportunity. In 2018, the quantitative easing. I mean, there's been any number of opportunities to panic and lead your plan, if you would. But if your plan is right-sized, those really have been great opportunities.
Obviously, I don't know much about this subject. I'm not an expert whatsoever, but based on all the stuff that you just mentioned, right, in the last couple of years, markets haven't done that bad, right? The way I see it.
Not at all. These monitors that I'm in front of is monitoring business news. And I have heard the gloom and the doom, of these very smart, very, very educated people. To me, it's laughable, because, they're saying this as the market is going up. As soon as they turn, then I'm going to be worried.
What message are they going to have, right?
Yeah, now they're all trying to, because the market looks for the pain trade, and the pain trade is up now.
Listen, our listeners are looking to, again, transform their lives. Usually that happens by transforming your wealth, your health, and relationships. How could they transform their wealth in just a few words?
How can they transform their wealth? Well, set yourself some goals. Start with your home as a method of wealth creation, and then set aside some money and invest in the capital markets.
Yeah, and stick to it.
And be patient. Be patient and start yesterday.
This one is, completely off topic, but since this is a personal development podcast, what would you say that, are good things, a good piece of advice that somebody has given you that you took to heart and it helped you improve your life?
One thing that I can think of is the important things that you do, the big things that you do are never easy, and there's always a moment in time when it's questionable. Should I have started global investment? There's always a point in time where you second guess yourself. Well, if you find your passion, you will be willing to stick it out. If you find something that you like to do, you'll stick it out when it doesn't look so good. So find something you like to do.
Man, that's some powerful advice. And it comes, right on my finger, because that's exactly what I'm doing, right? Episode number 1 of the podcast. I think that I could not have chosen a better guest to be here with me. Like, you made it so easy for me as well. I'm so appreciative that you gave me your time and you share all this wisdom with us. It was phenomenal, man. What do you think?
Well, I'm flattered that you invited me on. You think the world of you, and I think this will be a much better world with more, strong, intelligent, driven young men and women, but young men in your case, like yourself. So it's flattering that you had me on, and I want to thank you.
Awesome, brother. So nothing. I look forward to the continued support. We'll have you on for sure again, and cut.